Hello, this is Saurav from Tax Accountant. So this video is about if you are new in New Zealand and you want to start a business, or you have been living in New Zealand for a long time, born here, and wanting to start a business. So in next 5 to 7 minutes, I like to explain you what things you need to know before starting a business in New Zealand. Starting a business in New Zealand is a straightforward exercise. However, you need to think about certain things, such as what would you do from the accounting point of view, from the taxation point of view, and what should be the structure of your business, what are the threshold, what you need to do, and things like that. From the structure point of view, you got various options. You can operate as a sole trader, which is very simple way of doing business. You can operate as a company, you can operate a partnership, various options. So depending on what kind of structure you want to set up, these are the options for you. So under sole trader, you will pay a personal rates. Under company, 28% tax that you will pay. Partnership or trust, they're not generally used. Trusts are not generally used for businesses. The trust purpose is mainly the asset protection and the passive income building portfolio and things like that. But for the active business, such as what you planning to start, work out to be three options for you: sole trader, company, and partnership. Partnership is also useful. Do not disregard that. So if you got two partners, it's better you do partnership in a way that it's simple. Profits distributed 50-50. So in partnership, let's say you got income of 200,000 and expenses worth 50,000. So balance 150,000. If that's something, got your net profit. Partner A and partner B, 75-75, very easy split. Pay tax on individual tax returns rates. Job done. Finish. Don't need to worry about more complex things. That could be simple exercise. Partnership will be registered for its own tax number. There will be its own GST. So how it works is partnership will file the tax returns and the profit will be split 50-50. To be specific, I think top of mind IR7, that's the tax return for partnership. And there will be 50-50 split. Another option in partnership is a look-through company. It is a part of the company. So this is called LTC. You can do some Google search on LTC. You'll find some ideas. So one option is look-through company, in which also effective owner shareholding income will be split according to that. So in partnership, it's 50-50 or depending on the percentage. Generally, it's 50-50, but LTC could have a different rate. So LTC could be 80% 1%, 20% 1%, depending on which partner putting more efforts into it. Or that could also be used for tax efficiency structures. One partner is already on high income, other partner is on low income. So that sort of structure can be set up for that. Sole trader is the most simpler one. If you do nothing, let's say you don't put any structure, so sole trader is a default structure. Think about it, it's a default structure. It's automatically there. You don't need to do anything for that because you are born anyway. You got your ID number anyway, and based on that, you can do anything anyway. So it's a default structure. Nothing is required on that structure. Let's move on to next one. So what you will do when you need to register with the IRD, or when you need to register your business, formally do that business a name. So if you are registering a partnership or a company or a trust, registration is required from day one, regardless of how much you earn. $1, $2, regardless. Before you start your business, the registration has to be done before commencement of your business. However, if you are a sole trader, which is a default option, under that default option, no registration is required because you are already there. You have your ID number already. However, you will require registration if you are going to earn over $60,000. So $60,000 is a sales. So within next 12 months, if you're likely to earn 60,000, then you must register. It's not an optional after that number. It's mandatory that you need to register. My IR, there is my IR, you can search online. So this is the online platform where you can do your registration and things like that, communicate with the tax department and stuff like that. So what are your tax obligations under this? So income tax obligation, one of the first obligations is income tax obligation. The tax that you will pay on the personal tax rate. Watch another video. I have explained very well on the personal tax rate side, the examples and stuff. Company's tax rate is 28%. Don't get into technicalities, but think about it. A provisional tax is a tax in advance. So next year advance tax, today I'm paying. So advance tax, provisional is advance tax. Only and only if your income is over tax is over $5,000 this year, then provisional, which means advance tax next year, will kick in. Otherwise, if you're really small, don't need to worry about provisional / advance tax either. GST is 15% on most goods and services. New Zealand is the only country in the world which has 15% GST and no exemption. As far as I know, Australia has 10% GST and they have many exemption on healthy foods, fresh foods and things. Singapore has perhaps 5% GST. Again, they got many exemptions. Other parts of the world also have different kind of exemptions available to the GST portion. I just recently heard India is the most complex GST system. They had 4 different rates of GST. Wow, 4 different rates of GST. But they have also tried to simplify it, having 2 rates of GST. But again, it's slightly complex because there are different exemptions available. But New Zealand is the only country which we have no exemptions available. We have to pay GST on fresh foods, vegetables, everything. Few things that we don't pay GST on is the residential rent and financial services, and of course wages and salaries. So these are 3 large buckets, but other than that, majority of things are attracting GST with minor tweaks and things, and here and there digital services, export, import, all that stuff is there. But rule of thumb, 15% GST is there. ACC is Accident Compensation Corporation. So imagine if you are hurt and you are unable to work for 4 weeks. So first 2 weeks or 1 week, something, whatever they decide, they don't pay you. But after that stand down period, they will start paying 80% of your salary. Now, who will define what is your salary? You can't just tell them, oh, my salary is 100,000, just pay me that. Now, they will ask you, show me last year of tax return. What salary have you declared if you are self-employed? If you are on wages, they know that you are on wages anyway. But if you are self-employed, they will figure it out. What was your last few years of tax returns? And based on that, they'll just start paying 80% of your salary. So what you can do, when you're starting a business, I highly recommend separating business transactions separate. So having another bank account, or if you're a sole trader, at least a dedicated bank account for those transactions. You can use software, but if you're really small, perhaps there are a lot of free online softwares available for invoicing and things. So you don't need to waste money there. But if you know what you're doing, you can use software. But don't end up wasting money, because these softwares have a lot of features. But if you're not using all those features, what's the point? The software cost itself could be $1,000 to $2,000 a year. Wow, that's a big number. But because software is designed to do a lot of stuff. But if you're not using all those stuff, then what's the point? I just met another lady the other day. She's paying for a software $100 a month. Wow, $100 a month she's paying for it. And the total fee, what we quoted her to do for the whole year of work, $1,500. So $1,500, we are not cheap, but what I'm trying to say, the work required wasn't much. There was only 4, 5, 6 hours of work there. So we don't want to overcharge anyone. So according to us, the work for the whole year of work is just only this much. And she's paying the software provider for about $1,200 a year. So what she's trying to achieve from that software, not really. She still needs an accountant for that. Okay, maybe in future the software will produce a tax return by itself, or bing, go, everything gone. But hey, it's all subject to audit. If you are doing it yourself, there is highly likely there is a lot of risk involved doing it yourself, and the tax department will come and because likely there will be some mistakes. It won't be that straightforward, and if it is, then just a risk that you're taking with that. So set up a simple structure according to your needs. That's my point. Is do not set up big structure and which is not, you don't even need all those sort of stuff. Consider accountants, chartered accountant, ask anyone, go and talk to someone, do some advisory, and they will really help you to set up for a long term. Think about it, claiming the business expenses. What kind of business expenses you can claim? Major expenses, the home office deduction. So if you're a small business owner, you can claim home office deduction. So just put you into some context here. So imagine if you're doing, let's say your home is 100 square meter, right? So that's your 100 square meter. That's your house. Now, if you're using part of your house for office business purposes, let's say you're using 15 square meter for your house. So the percentage worked out to be 15%. Now the 15% number, now you can use this number on the things such as let's say $15 of every $100 that you spend on your house, not buying your house, but maintenance and upkeeping of your house, operating expense of your house. Because what we can say, nexus with income, that using the electricity is also linked to my business, using my water is also linked to my business, things like that, right? So would be some operating things. Operating things would be your power, water, gas, insurance. These are the regular things. Like, and there will be some fixed things. Fixed things would be fixed. Fixed is like rates. That's fixed. What you're paying for it, and the interest on mortgage. Right? Not the principal, just the interest portion on mortgage. These things are fixed that you have to pay. So 15% of those numbers as well. Now imagine interest on mortgage. If you got $1 million house and your mortgage is $50,000, right? On interest is $50,000. On that 50,000, we're talking about 15% of 50,000, which is about 7,500. Wow, that's a big expense. Yes, you can claim. That's all legitimate. Think about other things such as running your vehicle. So if you're running your vehicle for business purposes, the easiest method is a mileage method. So mileage method is number of distance I have traveled. Just keep a logbook each time I travel my car. So if I travel 30 kilometer, you just want to say destination A to destination B and the date. So just write a date. So today is 12 September. 12 September, I went from A to B. Start of odometer reading was this. Finish of odometer reading is this. Let's say this is 300,000, this is 320,000, so 20 kilometer. Wow, 20 kilometer I have traveled. Now depending on, you can do search online, but depending on the vehicle that you're using, so if you're using petrol vehicle or diesel vehicle or electric vehicle, different rates, or hybrid, different rates are there. And then 20 kilometer times by that rate. Let's say that rate is $1. So $20 is your expense. Wow, that's your vehicle expense that you can use for business. Any software that you're using, any training that you're doing, any subscription that you're using to upskill yourself. If you are an English language teacher, if that's your job, then you can look into what kind of subscription you use. I like to read the newspaper. I like to keep up with what's happening. So that could be subscription. I need to keep what's happening in the world. I need to learn new words all the time because I need to teach other people what the new words are, what the new trends are in the market. And I use the puzzle game because those newspapers have the puzzles games inside. So you can say that I need to play with those games to keep my mind sharp so that I can make the different word structure and things like that, and help other people build a better vocabulary and things like that. So any training that you need to upskill yourself, whether it's through formal, informal, any kind of training, any software, any professional fee using accountants, that is your fee. You can use for your tax expense. I highly recommend using accountants. I'm not selling myself, but it's good. Imagine one thing: you pay an accountant $300, for example. All that money will come back to you. 1/3 of money will come back to you in lower tax deductions. Then why wouldn't you use them? It's as simple as that, right? So you're actually only paying 60-70% of that. Balance is all paid through your savings and tax. So it's highly recommend use them. And again, keep proper track of everything, whatever you do. Thank you for watching this video, and videos like this. Please subscribe to our channel and like this video. Thank you.